Hi, I'm Batu from freefincal, and in this video, let's take a look at the Shariah mode of investing, in particular Tata Ethical Fund. There are only two such funds. One is from Taurus, one is from Tata. I think it's safe to assume that there's only one ethical fund that from Tata. Let's leave alone Taurus. So we're going to talk about the Shariah mode of investing and how it is a nice natural stock selection filter. So the Shariah law has got several rules associated with it. The first rule is that according to the Shariah law, a person who cannot earn any kind of interest income, and this means that money, even the SB account interest is not allowed. You have to put your money in a current account and so on. So and any business that that does harm to the human society is disallowed. This is a screenshot from the Nifty Shariah Index methodology. There are two Shariah indices, one which is a subset of the Nifty 50. So the Shariah compliant stocks from the Nifty 50 form one index. Currently it has got about 18 stocks, and the Shariah compliant stocks from the NSE 500, the Nifty 500 has got is the Nifty Shariah 500 index. It's got about 210 stocks currently. So what you see here is a list of all the rules, the kind of businesses that are not allowed: banks, insurance companies, finance and investment companies, stockbroking, production of certain kinds of food, certain kind of businesses, or all. There's a long list of all that. Now, of course, these I mean the when I say certain kind of companies are not allowed, that will help also a person who's got a conscience. When it comes to the stock market, if you actually sit and think about it, when you make money, somebody else will always be making a loss, and that somebody could be the society in general, could be the environment in general. That's why you have there's another theme called the ESG theme, right? That's called ESG, right? That's what Quantum had launched a new fund. I'll talk about that in another video. So this is essentially if I I mean if I for me, I don't want just stock market returns. It depends on what company I'm investing in. If you are particular about that, it doesn't matter whether you're a Muslim, whether you're a Jain who also have these sort of rules, similar set of rules. In fact, there are more Jain investors in Tata Ethical Fund than there are Muslim investors or Sharia compliant investors. So if you, whatever your beliefs are, whatever your religion is, if you think that it's important for you to to understand, important for you to get money from stock market only from a particular set of companies who have their own set of ethics, then this kind of investing will work for you. But the reason why I'm making this video is because there are certain rules in the Sharia law which makes it easy for you to pick stocks, especially in the non-large cap sector, in the mid-cap, small-cap sectors, and so on, where it is a lot more harder to pick stocks. And coming to that, so gone far. So the main thing is that the in a Sharia, there are tolerances. Okay, you can't say there'll be no interest income, no no borrowing and so on. That'll be too rigid because in a world like today. So there are certain tolerances, and these tolerances are defined by there are certain advisory organizations who do this professionally, and Tata gets the certification done from them to do that. I forget the name, it doesn't matter. So the thing is that Sharia compliant stocks will have low borrowing. They will not leverage their business too much. Their debt to equity ratio will not be more than 30%, and their other income will not be more than 10%. So it will be a core business, and that business itself will be ethical. So, and this essentially means that, so if I'm choosing mid-cap, small-cap stocks which are Sharia compliant, then I'm essentially choosing a stock, a business which has got the ability to last. So if a mid-cap, small-cap already is heavily leveraged, then it may not survive for long. It will not survive a bad patch and so on. So therefore, that's my essential point here. Therefore, it serves as a natural selection. The Shariah 50 index, which is a subset of the Nifty 50 or the 500 Shariah 500, which is a subset of the Nifty 500. Also, these mutual funds or the Sharia compliant mutual funds should purge if they receive interest income of any kind from any source. They should purge it. They should get rid of it from time to time and announce that they have gotten rid of it on their website or to their unit holders. And Tata Ethical Fund does this. If you go to their website, they will have a link which talks about this. Then also, they are not allowed to do any kind of swaps, options, derivatives, etc., etc. It has to be clean stock buying and selling. So given all that, let's take a look at, so those are the top 10 stocks of Nifty 50 currently. You can see Infi there, TCS, HUL, Asian Paints, HCL, Titan, etc. Of course, you can sit and argue, are they really ethical businesses and so on. It becomes a very difficult situation then if you start talking about that. But the whole thing is, among the group of stocks available, this would be reasonably better and so on. Of course, it would be interesting to find out the overlap between a Shariah index and the ESG index and see how it works. We'll talk about that later on. So what you see here is the Tata Ethical Fund's market cap trend over the last 12 months. This is a snapshot from their latest the one pager that they have in their website. And you can see it's a very nice portfolio, a single equity portfolio kind of mix. It's got about 60% of large caps, about 15-20% of mid caps, and a little bit of small caps. So this is a very nice full equity portfolio. Also recognize that most of the it will be I mean, if at all it carries any cash, this fund, it should be in a current account, not earning any interest, and that is how it is because of the nature of the fund. So first, let's take a look at the indices themselves. So these are 7-year rolling returns. There are 1,419 7-year data points in each of those colored lines. The red line is the Nifty 500 Shariah Index. The white line is the Nifty 50 Shariah Index. The brown line is the Nifty 50. And the yellow line is the Nifty 500. All the indices are total returns indices. Notice that there's not much difference between the white line, brown line and yellow line. There's more or less similar over 7 years. There are periods when the Nifty 50 Shariah has underperformed the Nifty 50 itself. But what I'm very surprised about is that the red line has comfortably outperformed for a significant period of time, at least since 2016. The Nifty 500 Shariah has done quite well. It's got about half the stocks of Nifty 500, so it's got a decent chance of beating it. And also, it's because it's Shariah compliant, because many of the companies have got low debt to equity ratio, the chances of many of them surviving in the index become higher, and that's the reason why I believe the Nifty 500 Shariah has bet the other indices. Also, it's also a natural stock selection filters for people who are interested in looking at mid caps and small caps. Finally, let's take a look at the Tata fund itself. The blue line now I have added is the Tata Ethical Fund. Again, the blue line has done quite well for a considerable time in the past, especially during the big leap in the market. It has done well. The performance has kind of slipped down towards Nifty 50 in the last couple of years. If you look at value research in the last couple of years, it has failed to beat Nifty 500 Shariah. I have to find out what was the index before February 2018. I think it was changed. The benchmark index for this fund was changed to Nifty 500 Shariah in February 2018. I have to go check what it is I forgot to do. So that's what I wanted to say in this video. Tata Ethical Fund is a very good choice if you are a Jain investor, if you are a Muslim investor, if you would like to invest in ethical stocks, and also if you are interested in investing in stocks which are kind of different from the typical diversified equity funds which are heavy on financial institutions. This will be different because by construction they can't invest in banks, they can't invest in money lending financial institutions. So this portfolio construction will be different. It can be used for diversification as well if you understand how to use it. And also for stock picking, the basket of stocks in the Nifty 500 Sharia can be used as a short list depending on the debt to equity uh, ratio. So there's always something to learn in all these different kinds of thematic index construction, socially responsible indices they're called. There's always new things to learn, there's always new things to explore. So that's what we are doing in this video. I'll catch you again in another.